Get ready for a massive market shakeup, because prediction market traders are locking in a 92% probability that SpaceX completes its IPO by June 30, 2026, with a staggering valuation exceeding $1.5 trillion. This huge projection is putting the Procure Space ETF in a critical position, making investors wonder how this massive event will reshape the entire space economy. We break down exactly what this means for your investments right now. We look at the big players like BlackRock, who are reportedly considering a massive investment, and examine the complex financial maneuvering behind this potential listing. Is this the moment for major institutional money to jump in? Finally, we zoom out to the core of the whole story, the rocket itself. Despite all the hype surrounding the IPO, the real question remains whether Starship will finally deliver on its promise, as the company prepares for a potential return to flight. We look at the massive deals SpaceX has made, the ambitious plans for orbital data centers, and the stunning new footage from the Star Factory. Don't miss the full breakdown of the Starship saga. Prediction market traders on Polymarket currently assign a 92% probability that SpaceX will complete its initial public offering by June 30, 2026, with an anticipated valuation exceeding $1.5 trillion. This outlook places the Procure Space ETF, ticker NYSERCA, UFO, in a unique position for a niche fund valued at $749 million. UFO is recognized as one of the cleanest publicly listed expressions of the space economy, intentionally avoiding large defense prime companies that could dilute exposure to pure-play space companies, a structural advantage that the market has noted. The fund has demonstrated strong recent performance, with shares rising 130% over the trailing year and 45% year-to-date. The core investment thesis for UFO is anchored by the expectation that SpaceX will act as the sector's benchmark, much like leading AI chip makers have done for AI infrastructure. When a benchmark company achieves a public valuation, comparable companies are invariably repriced, regardless of whether the valuation is justified. UFO tracks the S-Network Space Index and concentrates at least 80% of its weight in companies deriving the majority of their revenue from space-related industries. Top holdings include Planet Labs at 6.16%, Viasat at 5.9%, and Globalstar at 5.28%, with satellite communications, GPS, and connectivity providers rounding out the top 10. The fund maintains a significant allocation to the industrials sector, with 47% of its space stocks falling under this classification, and 34.6% in the communication sector. With 71% U.S. exposure and meaningful slices in Japan, Canada, and Luxembourg, UFO is structured as a highly pure-play space startup ETF. While recent performance is encouraging, a broader historical view shows caution. The 5-year return for UFO stands at 117%, trailing the S&P 500 over the same period before accounting for dividends, suggesting it has not been the optimal vehicle for broad market exposure over its entire history. The narrative shifted significantly in the last 12 months, with SpaceX filing its confidential S-1 in early April 2026, making the IPO speculation actionable. Retail sentiment appears to confirm this market rotation. A top holding registered a Reddit sentiment score of 70.2, and a post regarding Rocket Lab, RKLB, garnered nearly 800 upvotes. Furthermore, positive regulatory news, such as an FCC commercial approval for a satellite constellation, has sustained bullish sentiment for connectivity names. UFO is best suited for investors seeking concentrated exposure to small and mid-cap space operators poised for the SpaceX listing, accepting this vehicle as a thematic investment rather than a core holding. A 3-5% sleeve allocation is justifiable if investors believe that a SpaceX benchmark valuation will positively impact the valuation of the fund's pure-play holdings. Investors seeking diversified aerospace exposure with defense ballast should instead consider a broad aerospace and defense ETF. Those betting on a specific catalyst date should note that prediction markets have already priced in the easy gains. The current share price is $57, and future performance hinges on whether a public SpaceX listing successfully re-rates comparable assets or if retail investor activity has already completed that valuation work. SpaceX is reportedly preparing for what could be history's largest initial public offering, targeting a valuation of $1.75 trillion as it prepares to list on the Nasdaq. This potential offering would dwarf previous record raises, such as Saudi Aramco's 2019 deal. The company plans to raise up to $75 billion from the offering, with a formal announcement anticipated around June 4th, and pricing set the day before trading commences on June 12th. Investors will not be buying just a rocket company. SpaceX has integrated Musk's artificial intelligence venture, xAI, through a $1.25 trillion all-stock merger in February, bundling the Grok AI chatbot and the X social media platform with the core space and satellite operations. The valuation is heavily underpinned by Starlink, the satellite broadband service. Starlink proved to be the financial engine, generating $11.4 billion in revenue in 2025, with operating margins around 63%, and now serves over 10 million subscribers globally, establishing it as SpaceX's largest and only consistently profitable division. With total group revenue reaching approximately $16 billion in 2025, the $1.75 trillion target implies a price-to-sales multiple exceeding 100 times, a figure that has generated significant scrutiny among analysts. Scottish Mortgage, a major shareholder, had valued the company at $1.25 trillion in March, representing a 40% discount to the proposed IPO target. Musk has positioned the xAI merger around a vision for solar-powered orbital data centers, arguing that the energy demands of artificial intelligence will eventually exceed sustainable terrestrial capacity. The timing of the IPO roadshow is notable, as it is expected to coincide with the jury deliberations in Musk's ongoing lawsuit against OpenAI and Sam Altman in Oakland, California, where Musk is seeking to reverse OpenAI's for-profit conversion and has claimed substantial damages. Furthermore, BlackRock is reportedly considering an investment ranging between $5 billion and $10 billion in the offering. SpaceX's planned initial public offering is stirring significant governance concerns among pension funds, prompting investors in both the UK and the US to scrutinize the company's structure, particularly concerning Elon Musk's voting rights ahead of the major public listing. The focus of investor concern centers on ensuring equitable governance and shareholder rights as SpaceX prepares for its blockbuster IPO. Analysts and responsible investors are closely examining the proposed framework to address potential imbalances in voting power, a critical factor for long-term institutional investment. This heightened scrutiny signals a key battleground in the upcoming listing process, where the balance between visionary leadership and robust shareholder oversight will be intensely debated. SpaceX, fundamentally a rocket company, is currently focused on the delivery of its Starship vehicle, a critical factor for the company's future trajectory. Despite recent high-profile financial maneuvers, including a $17 billion deal with EchoStar for wireless spectrum, plans for 1 million orbital data centers, a $250 billion merger with xAI, and sales of ground-based compute to Anthropic, which have propelled the company toward a potential $1.05 to $2 trillion IPO valuation. The core aspiration remains rooted in launch capabilities. This financial excitement is largely tangential to SpaceX's origins as a dominant launch provider in telecommunications and AI data services. All of SpaceX's ambitious goals over the next quarter of a century and its massive valuation hinge on the success of Starship. The revolutionary rocket has faced a mixed history, including a 7-month hiatus from flight and several setbacks during its 3 years of testing. However, the company is now anticipating a potential return to the skies this Wednesday. To build anticipation, SpaceX recently released a visually compelling video showcasing its massive new Star factory in South Texas, offering viewers an up-close look at the rockets and engines in development.